Welcome to another Cardano update. Like always, make sure to check out our YouTube memberships and our Patreon if you want access to all of our charts and if you want access to our daily Discord updates. Speaking of the daily Discord updates, as you can see, today we posted a very long one which explains everything in detail. And if you don't know what's going on in the market, the Discord server is the best way to understand what's going on. And let's talk about what's happening on the chart. So yes, we got another low right here, which was expected. We tested the 200-day moving average and then we bounced off of it. And this is probably the third wave of the C wave to the downside, which means that I am expecting another low. However, right now we are in the fourth wave move up, and the fourth wave move up actually got above the 618 resistance level and above the other resistance levels, for example the 0382 and the 50% resistance levels, and right now we are about to test the 0.786 resistance level, and if we manage to get above this, which is at 79.2 cents, and then if we manage to break above this high, which is at 81 cents, which is the second wave high, then I'm pretty much going to be able to say that maybe the low is already in and maybe we have a 5-wave move to the downside here, although I don't really see it. If we break above that high, that will break the downtrend, so we will not need another low after that, but as long as we stay below this high right here at 81 cents, then we could always get another low. And well, the support zone for the last low of the fifth wave of the C wave right now is at 71.6 cents. Obviously, if the fourth wave move down goes a bit higher, this is going to have to be adjusted, but for now I'm expecting it to bottom in this area or maybe even get to the much bigger 50% support level, so it should bounce in this area if we do get another low somewhere between 71.6 cents and maybe 70.8 cents. It could go a bit lower, but I don't think we're gonna go a bit lower because there is much support here. We have these two support levels and we also have the bull market support band, so if we get another low then we are probably bouncing after that. And what could be next after that? Well, we are still expecting the fifth wave move up, and the target for the fifth wave, as I mentioned yesterday, if we go lower, it's gonna have to be readjusted, and I think I already adjusted it for now. So if this is the low right here at 73 cents, then the target for the fifth wave move up is at $1.06, and that should complete a much bigger first wave. You already know the story, I'm not gonna explain this again. And also, yesterday when I posted the video, when I told you we might drop a bit, people were calling me bearish for no reason. I mean, I've been waiting for a fourth wave move down for weeks at this point, so, you know, I mean, it's an Elliott wave count, and so far it has worked pretty well, so I think we are going higher after this, but we could get another low, and if I say we might get another low, that does not mean I'm bearish. We kind of need this because that's how Elliott wave works, and so far, like I mentioned, it has been respected, so yeah, it would make sense to get another one because I cannot count 5 waves to the downside in a C wave. And yeah, after that, I'm still expecting another high. Now, a couple of days ago, I think I mentioned something on the daily, so let me talk about the RSI for a second here. I mentioned that what was happening over here looks very similar to what happened over here, but I think I'm going to have to change my opinion about this, and I think what we are doing right now on the daily RSI looks more similar to what we were doing over here in 2023 rather than what we did over here, and let me explain why. So here in 2023 we were below the bull market support band and we had a cross on the bull market support band, then we broke above it, and during this time we got overbought on the daily, then we cooled off as you can see on the RSI, and then after we cooled off for probably a month right here, we got another high and we got to the overbought territory on the daily RSI again, and that gave us new cycle highs. And right now I think we're pretty much doing the exact same thing. Yes, the move looks a bit different, but here we were also below the bull market support band, then we had a cross on the bull market support band, then we got above it, and just like we did over here, we cooled off on the RSI as you can see, and then I'm expecting another high over here, meaning that we could do something like we did over here. And then after we get that high, then maybe we could also get this move, which is gonna be perfect because we do need an ABC after that, and then we could go higher. So I think this is what we're doing right now. And well, if it's not, it doesn't really matter because the Elliott wave count still suggests that we will get another high. And now on the daily chart, as you can see, we're actually using the 200-day moving average as support. And this is what tells me that the low might be in because, well, we closed the wick right here, and usually when we do something like this, that's when the price bounces. So do not be surprised if we do not get another low because, well, the daily chart suggests that the low might already be in. And now let me talk about the RSI for a second. So here, I think we will test the moving average right there, and we could get above it. If we do get above it, then the fifth wave to the upside right here at around $1.06 could overextend. It could overextend to maybe the bigger resistance level, which is the red resistance level on the chart. This is the 0.618 resistance level of the previous all-time high, and it could overextend to this area if we do manage to get above the daily RSI right here, the moving average, but it doesn't have to. And honestly, I would much rather see another high and then an ABC down than, have the fifth wave overextend, because usually if the fifth wave overextends, then the second wave move down is kind of impulsive and it's kind of aggressive, so we don't really want to see that. And let me talk about that second wave move down right now. Let me give you an idea of where it could go. Of course, I don't know how high the fifth wave will go, so I cannot give you a perfect target for the second wave right here, but I could give you an idea of where we could go. And let me get a Fibonacci retracement, and let's say the fifth wave tops exactly at the 618 over here. If that's the case, then the target for the second wave would be at, let's say, 80.1 cents and 73.5 cents. So somewhere in this area, although, as I mentioned, if the fifth wave of the much bigger first wave overextends, and if we get to maybe the 0.786 resistance level or the 100% resistance level, then I think the second wave move down will be aggressive and we could drop all the way back down to the 618, of course, but the support zone will also have to be adjusted based on where the fifth wave tops. So let's say we top at like $1.27, the support zone will be higher. But yeah, the chart is still looking bullish in my opinion. And now, if you look at the RSI on the 4-hour, it did not get to the oversold territory, but it did get above the moving average right there. So I don't know what's gonna happen because I don't have a crystal ball. But if you were to ask me, I mean, right now, to confirm that the low is in, we need to stay above the moving average right there on the 4-hour, and then we need to break above the high right there, and that's gonna be a good confirmation that the low might be in, just because we will break out of the downtrend. So yeah, I already talked about this, there's no point in talking about it again. And other than that, I want to talk about the weekly as well. Here on the weekly, as you can see, we are pretty much testing the moving average on the RSI, and we are also testing the 200-day moving average, and I think today is Thursday if I'm not wrong. So if we close a wick above the 200-day SMA, this could give us a nice pump next week, and I don't think we'll go sideways for much longer. I think this is enough right now, and I think another high is very likely, and then we could focus on lower prices when we go into an ABC to the downside. Other than that, let me talk about Bitcoin dominance. Bitcoin dominance has another green wick right here, which is not good, but we still have time to close a red wick. And as I mentioned, we cannot afford to close too many green wicks on the weekly because that's exactly what we did over here after going down. And by the way, here we went down from 61.5% to about 54%, so let's say we went down about 7%. Right now we went down from 66% all the way down to 60%, so it's pretty much almost the exact same percentage. And if we continue copying what we did here, then we could get above the bull market support band and 200-day moving average. And if that happens, that could be very bearish because that's gonna give us new cycle highs on the Bitcoin dominance chart. And during this time, the altcoins will not do too good. So what we need to do right now is get a break below 60.3% dominance, and then we could focus on the altcoins going higher. And honestly, it would make sense if we did do that, because let's say we break below the 618 support level, the next support level would be at 58% right here. And well, during this time, when Bitcoin dominance drops to this support level, the altcoins could get another high in the fifth wave, and then we could get a bounce to the 618, get rejected over here like we did in November, and that could lead to a much bigger move to the downside. So I think this is how this could play out. Of course, I might be wrong, I don't know. But this is my idea, and that's pretty much it for today. So I hope you enjoyed. If you did, make sure to check out our YouTube memberships and our Patreon if you want access to all of our charts. And by the way, the gold members get 2 bonus weekly videos about other altcoins. If you are interested in that, check it out, and like, subscribe. I will see you in the next one.